Mr. Harris, good morning. Thank you for joining us. The automotive segment, especially in US and Europe, is facing what could be called as a decision-making delay. Tariffs, no tariffs, yes to tariffs, hello to tariffs, goodbye to tariffs. How is that affecting your business?
Well, good morning, and once again, thank you for the opportunity of being able to connect and give you my point of view and our perspective on what's happening in the market. As you suggested, there's been a fair amount of headwinds, specifically in the automotive industry, over the last 12 to 18 months, particularly in the run up to the U.S. elections last November. And with the runoff of tariffs that we've seen in the European market, I think the good news for us is that the latent investment capabilities of the customers that we're targeting are building. I think it's relatively clear now in the US that OEMs are going to have to be much more balanced in terms of their propulsion portfolio. And so I think that it's clear that in addition to the investment in electric vehicles, there's going to have to be ongoing investment in ICE propulsion systems and also plug-in hybrids. I think Europe is positioning itself to defend itself against the threat from China. And so we are starting to see the green shoots of improvement. And we're relatively bullish in the context of our prospects for the next fiscal year.
Okay. Is it safe to say that till the time we don't get crystal clear clarity on which way the manufacturing and the tariff regime would move, it would be hard for anyone to pinpoint the FY26 or this calendar year in terms of demand, in terms of client engagement, and also in terms of order booking? Will that be a fair statement at a broader level?
I don't think so. I think if you look at the investment in new product, I think we make decisions today, or the industry makes decisions today for products that will be introduced in 3 and 4 years' time, and so again, because investment decisions have been delayed, given the uncertainty in terms of the regulatory framework, I think there's a real bow wave of new product commitments that we're starting to see come through, and whereby there may be some indecision in terms of where those products are built and how the supply chains manifest themselves, given the evolving tariff discussions that are going on. I think the investment in new products are long overdue, and I think we're very likely in the not too distant future to see many of the decisions that we've been anticipating over the last 12 months to start to come through, and organizations like ourselves and the sector that we represent will start to see the type of growth that we consistently provided before the start of FY25.
Hi, Warren. Good morning. This is Shrishti also joining in. But give us a sense what's been happening in the EV space, and because what we are seeing is that there's a lot of technological shift. What we are witnessing right now, there's so many competition that is kicking in. The technologies seem to be advancing at a very fast pace. How should one go about in EVs, and what is the thing that you are getting to hear from the customers, what they actually want, and what kind of funding we are getting to see from the customers right now?
Yeah, I think it's a great question, and I think if you look at the transformation that's going on in the industry, there's clearly a transition from legacy internal combustion engines to electric vehicles, and I think quite clearly, despite the tapering of growth in EVs, I think it's quite clear that electric vehicles will be the propulsion system of choice in the future. But I think what's happened over the last 12 to 18 months has prompted many of the OEMs to look at the timeline with regard to the transition. And what we're seeing with many of our customers is that they're hedging their bets as far as EVs are concerned, and investing again in optimizing legacy propulsion systems, and also investing in things like plug-in hybrids. I think the other component, though, that is very often ignored with regard to the transition that the industry is going through, is that we're not only going through a propulsion system transition, but we're also moving towards smart products. And the impact of embedded electronics, the impact of software, regardless of the propulsion systems, is going to become more and more pervasive. And that's where we're seeing a lot of the ER&D dollars flowing into. It's in the tech stack that informs the driving and the passenger experience in the future. And we've seen not only consistent demand over the last 3 to 4 years, we've actually seen a pickup of that demand in that area over the last 12 months. So despite the fact that the industry's been going through some headwinds, the requirements and the capabilities that inform what the sector is doing in that space continues to represent significant opportunity for organizations like ourselves.
Okay. So we've discussed auto, but the company which you represent is actually an engineering company. I just want to introduce this for our viewers. There is also a large space, which is the aerospace. In aerospace, our understanding, at least in India, is that there is Airbus and there is Boeing. There is Boeing and there is Airbus. Where do you fit in? Because they both are different companies, different countries, and again, the word tariff is at play here.
Yeah, again, another great question. I think in terms of where we play today, we were impaneled by Airbus some 3.5, 4 years ago. We have gone through the accreditation that is required when one works with a company like Airbus. The aerospace industry is a very regulated industry, and so we've had to stand up offices in Toulouse and in Hamburg. We've gone through the deployment of the IT infrastructure. We've had our teams accredited, and over the last 12 months, we've really started to discharge services at scale for Airbus. One of the things that we're seeing with Airbus is the major challenge that they are going through, and this is really an industry challenge, is that they can't build enough aircraft to satisfy the demand. There's 22,000 commercial aircraft in productive use today. It's anticipated that there will be about 40,000 aircraft in productive use come 2040. So the demand is growing exponentially, and we're working with Airbus to address that particular need. And what that is providing is not just opportunity directly with Airbus, but also within their supply chain. And the aerospace supply chain is somewhat different than the automotive supply chain in that it includes some very, very multi-billion-dollar organizations. And so the opportunity there is significant. I think Boeing has certainly been through a number of challenges in the last 12 to 18 months. I think with the new leadership that is coming on board, I think with the support of the U.S. government, we're likely to see Boeing come back online in the near future, and we're working hard to position ourselves to take advantage of that as and when Boeing starts to really invest in not only manufacturing throughput, but also new product. There is speculation that Boeing will begin investment in the next couple of years on new products, and we want to be fully engaged and a part of that. And one of the things that we're very excited about is that the Tata Group has made a very big commitment to aerospace, and the influence that the group has is starting to provide tailwinds for all group companies, and we're certainly very much a part of that.
So just to wrap it up, sir, just one final question. Now, I'm going to address, let's say, our viewers, potential shareholders, existing shareholders. If they're looking at investing in your company, either investing or they invested, next 12 to 18 months, are you cautiously optimistic? Are you optimistic? Or are you bullish? Three different words.
Well, I think if you look at the timeline, in the short term, I'm cautiously optimistic. We're starting to see the green shoots come through, but until those green shoots translate into opportunities that we can convert, I think we will continue to be somewhat cautious. But if you look at our industry, you look at the ER&D space here in India that is satisfied by organizations like ourselves, it's a $65 billion market today, or it's a $65 billion business. That business is speculated to grow, somewhere in the 14 to 16% between now and 2030. So medium to long term, there is significant opportunity. And as we move beyond the next 3 to 6 months, we certainly believe that that is sizable opportunity. And as we progress through this calendar year, my cautious optimism will transition into optimism. And I think again, I continue to be bullish about the medium to long term.
Good to hear that, Warren, and so good having you on the show today. Thanks for your time.
Thank you again for your interest. Much appreciated.
If you like this video, then like, share and subscribe to ET Now.